Hello, my name is Ben Brinkley-Everard and I'm the Private Client Director of Beckett Financial Services, and I'm here today with the Portfolio Managers of Beckett Asset Management, Samantha Owen and Craig Brown, and we're going to discuss Beckett Asset Management's newest strategy called the Social Impact Portfolio. Sam, I'll start with you. Can you tell us a bit about the Social Impact Portfolio?
Yes, the Social Impact Portfolio is a fund of funds rather than direct equities, and it is actively managed. It is designed to be our interpretation of an ethically managed portfolio. We found that ethical views can be quite personal, so we wanted to steer away from calling it that. This really aims to invest in funds with a conscience. We have set out clear strategy rules, so investors are fully aware of what negative factors we've screened out in our process.
Thank you, Sam. So Craig, what are the strategy rules and how do you decide upon them?
Well, what we did is we sampled a diverse group of potential investors and asked them to rank various ethical criteria in order of importance to them. And as a result of the analysis, we saw that the top three areas for people were generally human rights issues, environmental abuse, and animal testing. We knew that as a result of a restricted investment universe, it may be difficult for us to build a fully diversified portfolio. And because of that, we decided that 70% of our allocation of equity and bonds in the portfolio would adhere specifically to those three strict criteria. However, the remaining allocation will still be defined as ethical by Financial Express, but may not necessarily in every case adhere to all three of those criteria.
Can you tell us why BAM has decided to launch this new portfolio?
We have launched this strategy to run alongside our existing portfolios and in direct response to investor demand. We recognise this to be an investment area of growing importance, and I think this launch reflects our ability to adapt to changing investment environments and deliver investment solutions that clients want.
How do you screen investments to make sure they comply with the strategy rules in terms of areas to avoid?
So what we do, Ben, is we use a piece of software from a well-known third-party provider. What that enables us to do is screen the entire fund universe for those funds which are eligible for inclusion in the portfolio based upon the strategy rules that I set out earlier. Now, this is an ongoing process and we continue to review the funds in the portfolio to ensure that they haven't changed their mandates and obviously to make sure that the portfolio as a whole continues to adhere to its strategy rules.
How risky is it compared to your other portfolios?
Well, Ben, we view this portfolio as a moderate risk portfolio, and it will be benchmarked against the Investment Association 20 to 60% in equities. This is actually the same benchmark as our existing income portfolio strategy. At inception, the portfolio will launch with 52% allocation to equities, although this can change over time in accordance with the 20 to 60% equity boundaries. Investors should be prepared to accept the normal risks associated by investing in any normal risk asset. Plus, with this ethical overlay, investors need to be aware that the investment universe is restricted and this could, in some cases, impact performance. A final consideration is the ability of the model to take positions in certain asset classes or geographical regions. This is because there is no ethical overlay, and an example would be in the absolute return area.
I see the strategy contains property. How can that be ethically screened?
Well, this was a really interesting area, Ben, because there are no property funds which are defined as ethical. However, Sam and I did know that there were property funds available which had strict criteria around sustainability and environmental impacts. So after a period of research, what we decided was that only funds that have been awarded a green star by the Global Real Estate Sustainability Benchmark, or GRSB for short, would be eligible for inclusion in the Social Impact Portfolio.
So, how can investors find out more and invest?
Well, Ben, we have a portfolio fact sheet available and supporting literature, but investors should contact their financial advisor to see if the strategy is suitable for their risk profile and their investment objectives.
I would just like to say a big thank you to the portfolio managers of Beckett Asset Management, Samantha Owen and Craig Brown, and thank you all for listening.